Good morning, Armor Insiders. Thank you for joining me in this morning meeting of our virtual hedge fund. What does this mean? You are a portfolio manager on the desk. We're going to get ourselves ready for the trading session. You have to figure out your strategy, what your risk tolerance, your goals are, what you're trying to do. Take this information as a way to stimulate that thought and then execute your strategy and be the smart money. We're going to go over our day trading strategy. We call it the carry trade. We're successful right now at about an 80% clip trading the S&P over the last few weeks. I'm going to tell you what that means. That has real meaning about the broader market. I'm going to share that in a minute. We're going to touch on our swing trading strategy. We call that Armor Macro. So we'll go over our index exposure and how we're managing that success. And then we're going to touch on top stocks to watch, top stocks to buy that we've been buying ourselves. You got to execute your own strategy. So this is, the hackneyed phrase, not investment advice. I'm sharing with you what I do. You figure out if it works for you. So stocks to buy, stocks to watch, stocks that we're selling. I'm going to go over the changes in our portfolio. So you might want to grab a pen and a piece of paper and get yourself ready for this discussion and then take it into the trading session. So let's begin with the elephant in the room. And that elephant is orange. How much fun. Highlighted stock of the day has to be highlighted position. This is our stock we've chosen here is the ETF of Bitcoin, FBTC. So before I get to anything else, we have to just, break out the party hats for a second. It's just a number. It doesn't really mean anything, but Bitcoin's traded above 100,000. We're somewhere around 103,000. It is true when you go through round numbers like that, at least in the stock market, and I don't think it'll be any different here with Bitcoin. You usually see stocks that go through 100. They usually jump to 120 or 130 in a short period of time. Bitcoin may be doing the same thing. You might see 120, 130,000 by the end of the month. Why does that happen? Because investing is an upside down pyramid of capital that can be attracted into an investment. And when you hit milestone markers, in many cases, more and more and more and more capital can now invest in the asset. I'm not exactly sure how that's going to affect Bitcoin. That really works in the stock market. As stocks hit higher and higher prices and market caps, more and more capital can invest, okay? And so you'll get that jump sometimes. Who knows? Let's, before I get to the swing trading of the indexes in the stock market, we just have to address what we're doing here in our cryptocurrency Bitcoin position. Bitcoin. Election night, 8 o'clock at night, fired up the cockpit, started buying all the Bitcoin I can get my hands on through really FBTC. If you look here at this chart pattern, you'll see a high tight pennant up here in the top right-hand part of the screen. So the green box is where we put on the position. This was a much bigger pennant. And so somewhere around 72,000 on Bitcoin is where we loaded the boat. It blew out after the election and set up a high tight wedge on top of a much bigger pennant, right? High tight wedge. The process for us is to trade around the core now. So there'll be two stops I'm using. My swing trading stop and my investing stop. My swing trading stop will be on a daily, the end of every day. If it hits it, I'm out. Investing stop, I'll wait till the end of the week. The object, in case you want to see a graphic representation of trading around the core, it's what we did in IBM, right? So loaded up IBM down in here in the 170 area, blew out 3 standard deviations above the 200-day, booked profit here. Stock sold off after earnings, made a double bottom, bought back what we sold higher. Of course, we've improved our cost, and now the price is going higher on IBM. That's trading around the core. That's the Armor investing way. Talked about this yesterday. If you were on the trading desk with me yesterday, we were chatting about investment philosophies and some of the best investors of all time. Think of Druckenmiller, think of Barry, think of, if you want to, Warren Buffett. Okay. If you look at their portfolios, they have a handful of big positions and everything else is small. And I was saying to you, if I ran money like that, Coinbase right here would be like one of my max position size. This is just an epic chart pattern from a weekly and a daily point of view. Okay. So I want to just show you the weekly chart here. This is just epic. New issue, reverse head and shoulders pattern on a weekly chart. It's just now breaking out. You drop down now into the daily pattern. High tight pennant. Broke out yesterday, gapping out this morning. That move is really just beginning. Now, you might think I'm crazy, but take a look at this chart as an example of Palantir. I shared with you in February that this new issue was breaking out of that pattern and it was going to go vertical. This is following what I really originally found. The first pattern I ever traded like this was Facebook back in 2001, I think it was. So look at this chart. Right in here was the breakout in Palantir, right? Around $20, $23 a share. Sure, it was up from $8. Sure, someone's going to say to you, oh, you should have bought it down at 10. It was 23. You should have bought it at 10. Stock has ripped from 23. Where is it at now? In the 60s and 70s. Okay. So look at Coinbase now. Yeah, sure. Okay, sure. I could have bought it in the 80. I get it, right? It's just breaking out now and the rip is in front of it. Roblox, same story, same type of pattern. Comes public at $45 a share, trades above 140. This is the base. That's the breakout. Now, look, I want to talk to you about something. Expectations when following the ARMR investing way. Very important. So try to give me your focus for a minute. I'm going to share with you what the expectation is when you're putting capital to work if you're following the ARMR investing way. This is not about swing trading. This is about the special situations portfolio and the ARMR Invest portfolio. We do not expect every position we buy to make money. We know if we put 10 stocks in a portfolio, a certain percentage will hit the stop and we'll take a loss. That certain percentage depends on the type of market we're in. Ripping bull market, we might be right 7 out of 10 times. That still means we're going to lose money on 3 transactions. Let me tell you something else. We can be wildly successful if we're just right 50% of the time. People don't think this through correctly. They get upset with themselves if they take losses. That's wrong. You don't have to be 100% right. Nobody is. You have to ride your winners and cut your losses quick. Now, here's the rub. If you're executing the ARMR investing way, your losses happen for your successes. You'll put 10 positions on and your stops will get hit on the losing ideas first, and you'll take some losses. And the other positions that work take time to mature. They stay above the stop and they take time to mature. Can't let losses get you off the bus. It's part of investing. You got to embrace it. Eventually, you should be happy about it. Yes, these are the 3 or 4 names that aren't going to work, and now I can focus on the ones that are working. If you're starting a portfolio, it will really take you about a year to layer and layer and layer on positions until you have your investments on correctly. What do I mean by that? You might put 10 positions on, 5 will hit the stop. So let's say you had a portfolio, 10 positions max, you're 100% invested. Risk monitor goes green, you get 100% invested. 5 hit the stop, 5 go up. So now you have 50% cash with 5 running. The market cycles, risk monitor goes from red to green again. Now it's green. You put the 50% of your capital that was in cash into 5 new names. 3 of them go up, 2 hit the stop. You follow me? The other 5 are going like this, and you've added 3 more that are working. You took 2 more stops. Now you're 80% long, 20% cash. Risk monitor goes red to green. You put the next 20% of the money to work. You follow me? Over time, and this is what's happened in the ARMR Invest portfolio, over time, depending on the type of market we're in, it could take 6 months to a year to be fully invested correctly. And then you get to do what I call managed success. You're just managing success, trading around core like we're doing in IBM, booking sometimes you'll book a profit in this investment idea. It'll hit a target. You're like, that's enough. And you'll take that, put it into cash, and then start the process over again. That, my friends, is a wrap on the morning meeting. I hope you find it helpful. ARMR Report subscribers, you're on your own now, but feel free to throw a question in the comment section. ARMR Insiders, 9:30, we'll get the live trading desk started and we'll go right to the close. Guys, at the end of the day, you may find this a bit overwhelming. You might need a little bit of help. I'm here for you, 561-575-6832. I'm happy to talk to you about it. And don't forget, I do manage capital for others. So if it's the right relationship, you need the help, you'd like for me to do it instead of you doing it yourself, maybe you got a day job and you can't keep your eye on it, I'm here for you. Let's see if that makes sense. Okay. Give me a shout. Happy to chat with you. Everybody, at the end of the day, remember, Make your own decisions, figure out your strategy, execute it, and be the smart one.